Canadian mining company Teck Resources reporting a profit in its latest quarter compared with a loss a year ago. Now, this comes despite disruptions at its copper mine in Chile, which has reduced output in the third quarter compared to last year. Let's get more now from Craig Hutchison, base metals analyst at TD Securities. Craig, thanks for joining us.
Yeah, thanks for having me on the show again.
Why the turnaround? What are you seeing that brought this turnaround for them?
So it's a bit of an unusual quarter this time around because the company actually pre-released their production and sales results. So today's update was really just around earnings per se. The beat relative to us and consensus, a lot of that had to do with positive provisional pricing adjustments that they had in the quarter. So it was about $100+ million of positive provisional adjustments just due to the fact that copper prices and zinc prices were a little bit higher in Q3 relative to Q2.
And with the copper prices up, they can go down. Any concerns about that?
Actually, we're quite positive on the macro for copper. We've had a tremendous amount of disruptions this year. I would say between 5 and 6% of global supply has been disrupted from key mines like Grasberg, Kamoa-Kakula, and actually QB, which is one of Teck's assets, has had a disappointing ramp up in this year, and it's going to continue to be slower than expected next year. So it's created a very tight supply dynamic for the macro environment for copper. So we're very constructive on copper as we look forward. Obviously, Teck can participate in that with a pretty large copper division.
So no real concerns about their mine then in Chile?
Well, they've pre-released the issues there. They've already given us guidance. They took a pretty substantial cut to their production guidance at QB about 2 weeks back. So I think they've cut it to the point that we have more comfort in the guidance they're providing next year. So there are obviously concerns if they can't ramp as expected. There's cautionary language around the potential that it could be a little bit worse than expected, but I think they've done a pretty substantial cut. I think they have a good handle on how they need to improve things there.
And what kind of concerns do they have that might delay that or might slow them down?
So the big issue at QB has been around the tailings dam. So when it runs through the mill, there's the tailings that they have to deal with. They're required to have a certain amount of freeboard, so they're raising the crest of the dam to a certain height. And so they've been constrained. They can't run the mill at full capacity until they effectively have the capacity in their tailings dam. So they've done a lot of additional work. They've had to bring in a bunch of additional rock, which has caused issues around capital expansion. They are addressing those issues now. If they can't get the crest of the dam to a certain point, there's potential that they could obviously have further delays, because that's the biggest constraint really is on the downstream of the mine itself and just getting those tailings dam built up.
Okay, and then with they've got the merger with Anglo-American. How is that playing out, and what kind of an effect is that having?
So the vote should take place in a couple months now. I think it's in early December. There's obviously deal risk around that deal. There's a potential for an interloper to come in here between now and December, whether it's for Anglo or whether it's for Rio. We saw BHP take a run at Anglo last year, so that's always a possibility. And then the second piece is you do need the B share voters to approve the deal. And I think people were generally disappointed with the fact that the merger was a no premium bid for Teck. So I think you still have some deal risks between now and December, convincing those shareholders to vote for the deal. Any
concerns on those two issues?
Yeah, I think there's obviously a potential for an interloper for Anglo. Everyone's looking. The large majors are looking for companies with copper exposure, and Anglo has cleaned up their business a lot. So I think there's certainly risk that somebody steps in here between now and then. And again, I think there's risk that the B shareholders don't approve the deal. There could be some changes to the deal before that. There could be a potential sweetener by Anglo, maybe a small bump in terms of premium to get shareholders over the line, but there certainly is deal risk.
Now, and you still have Teck Resources as a buy, though.
Yeah, because we're very constructive on copper, and Teck has really cleaned up their business over the last year or so. They divested the coal business. Going forward, once they solve these issues at QB, they have a very good copper pipeline. So again, we're constructive on copper, and we just need to get through some of these issues around QB, and I think they'll set the stage for a much better company going forward.
And just kind of a last question, how about mining as a whole? Where's your thoughts on it? Where do you see it going right now?
Again, in the copper space, we're very constructive. I think the setup generally for a lot of the commodities is quite constructive. A lot of it has to do with supply constraints. We haven't seen a tremendous amount of investment in a number of commodities over the last little while. And I also mentioned for a lot of the copper producers, gold is a byproduct credit. With gold close to record highs here, it's pulled back obviously in the last week or so. That's obviously a nice tailwind for the base metal producers that we focus on.
Okay, Craig, thanks very much for joining us today.
Yeah, thanks for having me on the show.
Craig Hutchison is a base metals analyst at TD Securities.